What used to be the American dream is now the American nightmare. The American dream used to include possibilities and ideas that were only available in the United States. Many people thought that if you worked hard, you could own a home and give your children a better life than you did. Less than 50 years ago, it was common for families to have only one person who brought in money, and that person's pay alone could buy a house, a car, and send their kids to college without going into major debt. These things are unimaginable in today's world. So how did we reach this point? And is there any coming back from this crisis? Let's find out in this video. Today, most families need both parents to work in order to pay for rent, food, schooling, healthcare, and other necessities. Since their prices have been going up so much, most working class families under the age of 40 can no longer afford to buy a single family home. Even though inflation is partly to blame, the US economy has other big problems that are not as obvious. What used to be a benefit is now something that only the top 10% of Americans can do. If this problem isn't fixed, people might not be able to buy a home for a whole generation. When housing prices get too high, they stop being an asset and start being a liability. Many people still remember the financial disaster of 2008, which was caused by a huge housing bubble. During that time, home lenders gave loans to anyone who could still breathe. This careless lending finally led to a lot of people buying homes who borrowed too much and couldn't pay their mortgages. These defaults caused a chain reaction of bank failures, so the government had to step in and use public money to save some of the biggest banks in the country. This terrible event sent shockwaves all over the world and caused the whole economy to go into a deep slump. One would think that banks and other financial firms would have learned something from this. As home prices in the US reach new highs, there are growing worries that another house bubble is forming, which could lead to another crash. If you look up a housing bubble, the internet will tell you that it is a rise in housing prices that is caused by high demand, gambling, and spending that is out of control. Most housing bubbles start with a rise in demand for a limited number of homes, which takes a long time to meet. Speculators then pour money into the market, which drives up demand even more. This description says exactly what has been going on for the last 3 years. We just like to remind you that if you appreciate our content, you can show that by subscribing to our channel. For regular updates, you can always turn on the notifications as well. Anyway, many experts have been expecting a housing market crash because of all the crazy speculation in the housing market. But home prices haven't changed much, even though Jerome Powell, who chairs the Federal Reserve of the United States, raised interest rates to slow down buyers. The number of homes for sale is still at an all-time low, which has caused the market to stay the same. New data also shows that the rise in home prices is due to the fact that baby boomers are still buying houses. That's because this generation of boomers owns more than half of the income in the United States, and they're using all cash offers to buy homes. Others help their kids get a house by paying for the down payment, but baby boomers are not the only ones who are to blame. The real reason why a whole generation of Americans can't afford to buy a home is because of the Federal Reserve and its arguably careless money practices. The United States is going through the biggest difference in monthly costs between owning a home and renting in more than 50 years. Since the early 1980s, Americans have been going through similar things. Taking inflation into account, a new chart made with data from Reventure Consulting shows how buying a single-family home in the US compares to renting one since 1970. As of September 2023, the average rate for a 30-year fixed-rate mortgage across the country was 7.48%, which was the highest it had been in 23 years. So, the median cost of renting in the United States is $1,850 per month, which is about 30% less than the median cost of owning a home, which is $2,700 per month. This is the biggest difference between renting and buying that has ever been seen in the United States. In 2022, the gap between these prices was less than $200, but in 2023, it has grown to more than $800. The number of people who can afford to live in a home has dropped to the lowest level in 40 years. Many potential buyers, especially those who want to buy their first home, can't get into the market because they're worried about how much it will cost. This has caused a big drop in people applying for mortgages to buy homes, to a level not seen in 20 years. Interestingly enough, recent estimates from the Federal Reserve show that interest rates could go up by the end of 2023. This means that there is likely to be at least one more rate hike this year. Many experts think that the mortgage rates will stay above 6% for the rest of the year, which will make it harder for people to get mortgages. As we've already said, this terrible housing bubble is partly caused by the Federal Reserve, and its strategy of having no interest rates. Of course, no government leader or Fed official will agree with this, or take the blame for their failed policies. Diving further into this, in 2020 and 2021, the Federal Reserve poured trillions of dollars into the US economy and kept interest rates at zero. The Fed gave Wall Street and huge hedge funds easy money to help the stock and real estate markets. Of course, this did have some sort of benefits for the economy, but not nearly as much as the adverse effects it had. Because of this, trillions of dollars went into stocks, cryptocurrencies, and real estate, but we're only referring to the real estate market today. In the past few years, people who wanted to buy a house often had to bid against a Wall Street private equity group that had enough money to beat all offers. A recent story from CNBC says that by 2030, institutional investors will own 40% of single-family homes in the United States. The other thing that made the housing market look bad was how quickly Airbnb grew. With interest rates that low, many people would buy multiple vacation homes across the US as a side job to make more money. As the boost from the pandemic ends, many Americans are going on fewer trips and spending less money. This will definitely hurt the Airbnb business. People are worried that a house crash could happen because the number of listings and incomes are going down. But even if more houses come on the market, prices are not expected to drop so quickly. If we think back to 2008, the bottom of home prices didn't come until 2012, which is almost 4 years later. The current market is likely to follow the same path, and the record low housing supply could make it take even longer for home prices to go down. Just last year, Democratic Congressman Ro Khanna from California and other lawmakers in Washington proposed the Stop Wall Street Landlords Act to get rid of the huge tax breaks that big companies get when they buy real estate. Khanna told CNBC in an interview that it was wrong that your tax dollars were being used to help Wall Street buy up single-family houses. Massive private equity groups like BlackRock, Vanguard, and others should not be able to buy up half the homes in the US and create a generation of renters. To stop this from happening, Congress and lawmakers should be ready to pass laws that make it nearly impossible for these corporations to do so. As for the Federal Reserve, in the past, their strategy of having no interest rates has made the wealth gap in the United States even worse. Quantitative easing and growing the balance sheet have done nothing but make the rich richer and the poor poorer. If they keep making money and keeping interest rates low, the middle class in the US will be in much deeper trouble by 2030. Jerome Powell understands this, which is one reason why he has been raising interest rates so quickly. There is no doubt that he is, in turn, also been upsetting some big Wall Street players who have been getting money for free for the last 10 years. So both commercial real estate and the stock market will face big problems in the second half of 2023 and the first half of 2024. How do you see the economy going? And what do you think will happen next year? Don't forget to share your thoughts in the comments below.